from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Caroline Hyde in New York, in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, a pretty jaw-dropping jobs report. The labour market coming in strong, defying all economists' expectations. We'll bring you the details. Plus, Meta's metamorphic week, dropping the most ever, but not everyone is down on the company, formerly known as Facebook. I'll speak with someone who says the bet is still on for the metaverse to pay off. And supporting the development of blockchain and Web 3.0 in other parts of the world. We'll have more on Jay-Z and Jack Dorsey's blind fund for Bitcoin development in Africa and India. We'll get to all of that in about a moment. But first, let's get a look at these markets. Treasuries, while falling, yields rising because we had a strong US jobs report, a phenomenally strong one. And of course, that increases bets that we will get monetary policy that will raise rates. US stocks actually managing to power through that. It seems there's a bullish sentiment, and of course, in some way helped by Amazon's earnings. Ed Ludlow joining us for this Friday rundown.
Yep, that's the digest. Green on the screen. The stock market's back, Caroline. It's back. End on a high. Okay, it's one day. It's Friday. NASDAQ 100 up by 1.3%. Added more jobs than expected, but really this is the Amazon effect. Huge monster move, 13.5%, biggest one-day jump since April 2015, $191 billion of market value added in a single day, the most added by a US company in history. Now, you might be thinking to yourself, well, hold on, haven't I heard their similar line earlier in the week? Meta down 0.3%, the Facebook parent company having the biggest one-day loss in US public market history earlier in the week. So we've kind of reversed some of those losses following Meta's earnings. It was really interesting. Risk on mode, right? Bloomberg Galaxy Crypto Index up 12%. That's a broad basket of all the tokens that we follow, but a big part of that weighting is Bitcoin. Let's take a look at Bitcoin then over the last 5 days. This is a pretty big jump, right? This is Friday risk on mode you're seeing right over there on the left-hand side of your screen. We're hovering above 40,000. We didn't see such dramatic moves in the cryptocurrency like we saw in the equity markets throughout the week, but we've caught up this Friday and we're at $40,000 per token for the first time in around 2 weeks. But as I said, the Amazon effect. You know me, I like context. I don't want to put a downer on things. But even that monster move in Amazon, this is year to date. This is a stock that's been under pressure. You know, we've come through the brutal period of earnings season. We've had Amazon, we've had Alphabet now to conclude the pack of the mega caps. Where do we go from here in equity markets? It's going to be a really interesting one to watch.
It will be. Ed, thank you for the rundown and the market reaction to what was a day taken up by economics. US labour market showing really unexpected strength last month, despite some record COVID-19 infections. Let's hear what Bloomberg guests had to say about that surprise payrolls report.
In every single part of this number was solid.
It's a huge surprise.
You don't see the expected Omicron impact.
The economy is shaking off this pandemic and it's moving forward.
This is the labor market really screaming, I should say. And that's going to continue to keep the pressure on the Fed.
It tells you that the Fed has fallen further behind the curve.
There should be no ambiguity. The environment is one of tightening policy.
The market is pricing this acceleration in near-term tightening.
Let's digest it all with Reid Pickett joining us for the breakdown, which was a jaw-dropping number, and not just for January, but the revisions for December too.
Absolutely. And so, that was a big part of the story, was that, the year started off on much better footing than we thought it did. So instead of kind of seeing this burst of job growth last summer and then seeing a deceleration in job growth at the end of last year, instead what you've really seen is this momentum of the U.S. economy adding some 500,000 jobs a month since May. And so the fact that we were able to get a positive number when White House officials and Federal Reserve officials, economists, analysts were all kind of whispering about, or talking very loudly, I guess, about the possibility of a really bad print. It was an entirely different reversal in terms of getting this picture of a jobs market that is strong, just like Jay Powell said in his press conference last week.
Talk to us about where we can pick holes in the data, because many had anticipated, well, the ADP reading yesterday was ugly. And then we have every economist blown away by this number. None of them called it right. And many then also starting to say, look, if you were off sick, this wasn't really counted in the non-farm payrolls. Was it as good as it really looked?
There's definitely quite a few holes you can pick. I would say, like everyone else, and like we were talking about, even if this had been a negative number, this is a report that a lot of folks are going to look through, given how many distortions we had from seasonal adjustment, from Omicron, from what you mentioned in terms of the way that folks out sick are counted in the payrolls number. But I would say the main thing to keep in mind is that seasonal adjustment in terms of thinking about a combination of a bigger seasonal ad than we typically get, but also seeing that some businesses chose to not lay off as many workers after the holidays as they normally would, given that we have such a tight labor market. So we've obviously heard all of the challenges that businesses have had in filling those positions. And so this was a good opportunity to folks to hold on to some of those workers that they hired a few months ago.
Now, what was interesting in the market was the fact that usually when yields spike higher and we worry about the Federal Reserve getting hawkish, the market falls, in particular tech stocks falls. But today that didn't happen. Talk to us about what the monetary policy implication is of this number, you think?
Absolutely. So, one key number that market participants were watching in terms of the Fed is this wage number. And we did see wages surge much higher than folks were expecting, and not actually having as many compositional issues that a lot of folks were thinking might happen as well. Though you did get the average hours worked for the week, you did see that decrease, which definitely had an impact as well. But for the Fed, this really kind of locks in expectations for that March increase. But one thing that I thought was quite interesting is you also kind of heard some talk while folks weren't saying they weren't changing their base case to this by any kind of means, but the talk of a 50 basis point hike in March kind of started coming up a little bit more, which was really interesting to watch, given where the Fed is.
We'll see whether or not they do indeed go. We had plenty of Fed talk this week saying, no, 50 basis points, it's too much. Bloomberg US economy reporter Reed Pickett, have a wonderful weekend. Stay well. Meanwhile, we're talking about wage inflation. Some of that might drift across to Amazon workers. But what about the inflation that Amazon, users are going to be finding? Of course, they're raising their prices. The e-commerce giant shares surging on the back of that news they gave us yesterday. Remember, they were up, 9% on the week, some 14% on Friday, adding about $191 billion in market value as investors really cheered that price increase. Bloomberg's Spencer Soper joins us for more. And talk to us about the membership price increase and whether you're getting it on the year or on the month. What are people going to be swallowing here?
Yeah, so it'll be a $20 increase for people who pay yearly, and then an extra $2 a month or $24 a year for people who pay monthly. $20 for yearly, $2 a month for monthly. And the thing we were surprised to see is that actually a little more than half of members are on this monthly payment plan in the U.S. So that's something they introduced back in 2016 just to try to appeal to more, low and moderate income shoppers for whom, at the time it was $99, that was a big blow to say, wait a minute, I got to pay $100 just to shop. They introduced this monthly plan to kind of soften the blow of that, and it's really taken off, and it's really helping them add a lot of members. And who knows now if 139 is too steep for folks, they could always trade down to the $15 a month plan.
But let's talk about that $15 a month plan, because we know that inflation hits the lower income the most, and if that's tailored towards that part of the market, is there any fear of backlash? Is there any point that we think that the price elasticity just isn't there?
Yeah, that's a great question, and so far the numbers don't bear that out. I mean, the prime retention for the monthly subscribers right now is nearly just as good as the yearly members. And you'd think, okay, if you pay monthly, you could cherry pick your months and be a member for a couple months over the holidays and then peel your membership back. But that really doesn't happen, and but there has been a little bit of backlash on like social media, like Jeff Bezos needs $20 more a year from me so he can go to space and build his yacht. But that's just, we don't know if that's just fleeting Twitter rage and if that'll translate into people actually, canceling their subscription.
Yeah, sometimes the need is too real for your deliveries. We thank you so much, Spencer Soper. Stay well, have a wonderful weekend. Meanwhile, coming up, what does the future hold for Meta after its historic fall? Our conversation with Empire Financial Whitney Tilson on why it's time to buy and not to sell. That's next. This is Bloomberg. Now, let's talk about Meta, because remember, we were talking about this $250 billion wipeout on Thursday. One investor and former hedge fund manager is still pretty bullish on the social media company's big bet on the metaverse. Pleased to welcome now to the show Whitney Tilson, Empire Financial Research founder, CEO. And Whitney, talk to us about why this shift, this pivot, is the right one at the right time.
Well, look, we basically think it's an incredible company that's encountering some short-term turbulence, and short-term may mean it lasts for a few quarters. We're not making any immediate call that things are going to suddenly get better, but that's, as a value investor, I look to buy great businesses when they temporarily fall out of favor, when I think the long-term economic characteristics and growth are still intact, and I think that's the case.
Okay, talk to us about the long-term growth, because that's what everyone's now questioning. The sudden jolt that this is a company that, yes, is still posting about 20% revenue growth, but isn't posting that sort of growth in daily active users. Why is the growth trajectory still a strong one from your perspective?
Right. Well, keep in mind that Meta is not just Facebook, which has slowed down dramatically, but Instagram and WhatsApp are still growing, and you still got 10%. Active user growth year over year in a quarter that was supposedly horrible. They also, the two drivers of Meta's revenue growth are, of course, number of users times the monetization per user. And in every part of the world, that also rose in the fourth quarter. So again, they're making the shift by Apple that makes ad targeting more difficult is sort of a one-time downward reset by about $10 billion this year. And they're making a big investment in the metaverse, which we actually think is sort of an interesting free call option that you're not paying for here. But let's keep in mind,
Aren't you paying for it? They've just paid $10 billion to invest in that part of the business.
Well, they're not paying $10 billion. They're investing a cost of $10 billion annually going forward. So that haircut earnings last year, for example, were 18% lower than they would have been had they not been making this big investment. So we look at the core business, which has some of the greatest economic characteristics of any business in the world. I'd say rivaling Alphabet's business. Right now you're paying less than 18 times this year's reset lower earnings estimates. And in fact, I was stunned to see famed short seller Jim Chanos tweeted that Meta is cheaper. The stock is cheaper than IBM, which is a notorious value trap. It's been a value trap I've been warning my readers about literally for more than 20 years, and the stock has been flat for 20 years.
Yeah, but to be fair to Arvind over at IBM, they've actually started to post the revenue growth that many had hoped to see from IBM. We're starting to see the cloud business take off because there's more business spending, but we haven't seen that sort of business spending coming into the advertising part of, for example, the whole plethora of Instagram and Facebook. And instead, what we're seeing is Mark Zuckerberg warning about competition.
No question, competition is rising, and you can buy Facebook today at 11 times trailing 2021 EBITDA. IBM, for perspective, trades at 15.4 times trailing EBITDA. And IBM's got a bunch of net debt. Facebook is drowning in cash. It is one of those numbers is wrong. It is absolutely one of the most craziest things I have ever seen in the markets when IBM trades at 15 times EBITDA and Facebook trades at 11 times. One of those numbers is very wrong. I think IBM's probably overvalued, but I also believe Facebook/Meta is undervalued.
Very briefly, from your perspective, you're also warning, you talked about IBM value trap. There's also traps, you think, in some of the more speculative parts of the market, particularly I'm looking at AMC and the like. You really don't like some of those stocks.
Yeah, well over a year ago, literally the day the meme stock bubble peaked, I published and sent out an email to my 140,000 readers calling the top of the meme stock bubble literally to the hour. Those stocks, I named 25 stocks. The leading two were GameStop and AMC. They're down an average. Those 25 stocks collectively are down an average of 50% in a plus 16 market. But again, exactly a month ago today, I named my top 10 stocks to top 12, excuse me. I call them the dirty dozen, the stocks to avoid for this year, the stocks that I would be shorting if I were still running a hedge fund. The three top stocks are Digital World Acquisition, the Trump SPAC, which is the only one that's actually gone up in the last month, making it an even stronger stock to avoid. And then my next two are GameStop and AMC, which are down 70, 80% from their all-time highs when I nailed them a year ago, but still are overvalued. So, this is an interesting market.
Yes.
A lot of speculative stuff has pulled back, creating good opportunities to get into good companies, but there's still a lot of overvalued dreck out there. So it's, to being a long short investor like I am, lots of opportunities on both sides.
Well, we can but hope for interesting times and with that interesting markets. Whitney Tilson, we thank you so much. Empire Financial Research CEO, great to have some time with you and expertise. Meanwhile, we've got some breaking news for our audience here. Now, this is coming from Dow Jones that Peloton, we understand, is drawing interest from suitors, including none other than Amazon, according to Dow Jones. Now, the shares are surging after hours on the report of this suitor interest. They've, of course, been facing pressure, we understand, from activist investors as well to replace the CEO. So John Foley, once again in the spotlight, Dow Jones looking at that particular stock. Another story that we're watching is Nike suing StockX. Now, the online sneaker marketplace is alleging that, Nike is alleging that its NFT services uses Nike's trademarks without its approval. Nike claiming StockX is, quote, blatantly free riding almost exclusively on the back of Nike's famous trademarks and associated goodwill. Spokesman for StockX has yet to respond to a request for comment from Bloomberg. And the lawsuit is the latest litigation over NFTs. Remember, we were talking about the Birkin ones, but last week. Coming up, we'll hear more from my colleague Emily Chang, of course, host of this show, a conversation with California Congressman Ro Khanna on how Congress could rein in big tech and how it makes technology benefit all of America. That's next. This is Bloomberg. Now, the House has passed a bill that Democrats say will increase the U.S. chip-making industry and boost American competitiveness with China. It includes $52 billion to make chips and $45 billion to improve supply chains for critical items. The bill was passed largely along party lines, with the Republican objecting that it's too weak on China. A final bill will be negotiated between the House and the Senate in the following weeks. Meanwhile, Meta shares plunging has been talking, Facebook subscriber rates stalling. Some say this could be the rise and now the fall of big tech. This following years of growing scrutiny. But California Representative Ro Khanna, who represents Silicon Valley in Congress, is out with a new book, Dignity in a Digital Age, where he lays out a few ideas on how to make big tech's power and wealth more accessible to all workers of the United States. Bloomberg Technology's Emily Chang spoke with him earlier this week about this and about how the pandemic allowed new tech hubs to emerge throughout the country. Take a listen.
The pandemic was a forced experiment in remote work, and these companies figured out that not everything had to be near Sand Hill Road, that they could invest across the heartland and in the South. In fact, one venture capitalist who criticized my book said, "Ro, we're already doing everything." So it has gone from being seen as impossible to inevitable. But when I think of an ideal example, I think of Intel in Ohio putting $20 billion in, creating 3,000 manufacturing jobs, 7,000 construction jobs. I talked to Pat, the Intel CEO, a couple of days ago. He said there's so much enthusiasm there, nationalism there, aspiration for the future. That's what we need to do around the country.
You're calling for mutual responsibility between Congress and the tech industry, tech CEOs, in the innovation economy. What specifically do you want to see from Mark Zuckerberg, Sundar Pichai, Satya Nadella, Andy Jassy, even Tim Cook?
Well, I want to see two things. On the economic front, I want them to be imaginative about how they can recruit and retain more talent from rural America, from HBCUs and Hispanic-serving institutions, make more investments across the country, as Pat at Intel is doing. I mean, he grew up in Pennsylvania. He really believes that he has a responsibility to build American manufacturing and is excited about that. I'd like all of the tech CEOs to imagine how they create opportunity in places that have been left out. In terms of the public sphere, that's a much harder question because yes, we need regulation on data, on consumer protection, on making sure that there's competition, but the government can't be the arbiter of truth. And so these companies, particularly these social media companies, have a responsibility to make sure that the speech that they're encouraging is inclusive, that they are being thoughtful in creating a space for people to exchange ideas, and they aren't just defaulting to sensationalism that captures attention but isn't really conducive to good public discourse.
Big tech companies say that breaking them up will only make it harder for users to use services that they love, and that helps small businesses. What's your response to that?
I think there has to be a balance. I am not for just breaking up all big tech. There are absolutely efficiencies of scale. There are products that help consumers and that actually help small businesses advertise. On the other hand, when you have companies that are acquiring competitors to kill competition, that shouldn't be allowed. And when you have companies that are privileging their own products and not allowing other vendors or sellers onto their platform without any good reason, that shouldn't be allowed. And so what I've proposed is a balancing test saying you shouldn't be able to discriminate against sellers unless you can show it's clearly in the consumer welfare. I sort of strike a middle ground between the break them all up school of thought or the let them just be school of thought and have a balanced, well-crafted regulatory approach.
California Representative Ro Khanna there. Coming up, what a week it has been. Yet again, we'll dive into those tech earnings, what they mean, how long tech can keep on delivering. Plus later, we're going to be talking about B-Trust. That is the Bitcoin blind trust set up by Jack Dorsey and Jay-Z to fund Bitcoin development in Africa and India. More on that later in the hour. Meanwhile, breaking news coming from the likes of Dow Jones saying that Peloton is drawing interest from suitors, including that of Amazon. We're also seeing apparently pressure from activist investors to replace Sean Foley as CEO. We'll have more on that and the remarkable after-hours share price move in Peloton. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. And let's get back to what has been, well, what's felt like a wild week in financial markets. Meta's plunge, Amazon's pop, both of them records. And it was really one for the books. Bloomberg's Ed Ludlow is here as we ended Big Tech's first earnings season of 2022. And we had some star performers and one notable exception.
Yeah, we do. And before we even get to that, I'm really sorry to say, Caroline, the wild week continues because we've got some breaking news after the bell. According to a report by the Wall Street Journal and Dow Jones, Amazon, among others, are expressing interest in buying Peloton. According to unnamed sources in the Wall Street Journal report, Amazon is already talking to advisors about acquiring Peloton. You can see what the market thinks about it. The stock up 34% in after hours. Now, it had been up as much as 40%. Remember, this is a company whose stock is down 30% year to date. Wow. It has rethought its production plans. It is shrinking back because demand has fallen off a cliff right here. So really interesting development. Amazon's got almost $100 billion in cash. Peloton currently valued at $8 billion based on Friday's closing price. Could you see it happen? We'll have to wait and see. But my goodness, what a way to end the week. And it has been a week. So let's go back on track and talk about it. The NASDAQ 100, you know, we've been all over the place. We sunk with Meta, we rose with Amazon, but the net effect of that, of course, is that We've had a good week, the best week, in fact, since the holiday week of December. The NASDAQ 100 also posting back-to-back gains on a weekly basis. So have we turned a corner, really, as we come out of January into February? We see also semiconductors, mega caps, the ARK Innovation ETF. There's a change of vibe as we end the week, Caroline. But there are some specific winners and losers, right? So very quickly, I'll go through them. We've got to talk about Alphabet, and we've got to talk about Amazon. Amazon is the story in equity markets, right? The biggest one-day gain in market value for a US company in history. It ended the week pretty strong as well, because remember, it too was susceptible to the volatility we've seen. Meta Platforms, on the other hand, its worst week ever. And I'm sure you're about to have a really robust conversation about that. And I'll just leave this next board up for you to think on, because two of the surprises of the week, Snap and Pinterest. Did we see that one coming? Probably not.
What a move for Snap on the week, but I mean, phenomenal. You're still down if you've been, of course, buying Snap earlier this month, but certainly up if you bought it a couple of days ago. Ed, what a great roundup and keeping us up abreast of the latest breaking news. Meanwhile, as Ed was saying, we want to stick on what has been an enormous week. Tech earnings are plenty. Dive deeper into what the business models are telling us right now. David Kirkpatrick. David Kirkpatrick, it's been a long week, Techonomy founder and editor-in-chief, as well as Bloomberg Intelligence's Mandeep Singh. He's our senior industry analyst. Both of you I've had on multiple times this week because you are the perfect voices to speak to this moment. David, first and foremost, the fact that Meta ended up being the outlier. What is happening? Is it that they specifically are losing their advertising traction? What do you make of the moves? Because we saw real outperformance from the likes of Alphabet, and then even Amazon outperforming Snap as well.
I think it's kind of surprising. Facebook, Meta, has done such an extraordinary job over so many years creating a very reliably well-performing ad platform, and now it seems to be underperforming almost all of its competitors. The only thing that I can think of to possibly explain that, and I'm curious whether Mandeep finds this plausible, is that maybe in the months since they shifted and changed their name and they've been asking their engineers to reapply for jobs in the metaverse division, et cetera, they've just taken the eye off the ball of their traditional core business, which is, as Whitney Tilson was saying earlier, an extraordinary business that really should still be performing.
Mandeep, your views on that?
Well, so look, I think they tried to get too many bad news out at once, and that's why the stock reacted the way it did. The underlying business is still built around small businesses. So if Meta is saying, they're going to grow mid-single digit or maybe 11% at the high end, that is telling you something about the small business spending on advertising. And that could have bigger implications because the scale at which Meta operates, 100 billion plus in revenue, and Snapchat and Peloton, they are like 2% of Meta scale. And I think Meta's numbers and the guidance is telling you that digital advertising overall may be decelerating. We may have pulled forward some of the growth during the COVID years, but probably it's decelerating now.
Decelerating. Talk to us, Mandeep, about what the other storylines have been there for. Which is the business model to be betting on at the moment if we are seeing a deceleration in some of this advertising? Because interestingly, even with Alphabet firing on all cylinders except YouTube.
Yeah, so I think what's resilient right now is enterprise software. We continue to see 40% growth in cloud. I mean, Amazon numbers were great, but guess what? Most of the upside came from cloud. Same thing we have seen with other enterprise software names, Microsoft, ServiceNow. So clearly it's holding up well. And typically in a cycle, that's the last one. IT spending stays strong. And, once you start to see economy slow down, that's when companies cut their IT spending. The other one that has helped well is semiconductors. And the reason why, it's because of the supply shortages, as well as semiconductors, the space is very consolidated. So right now, they're showing the pricing power. And those are the type of businesses that continue to do well. Those have pricing power when it comes to, all these businesses, whether it's semiconductor or software.
And look, even Amazon has pricing power when it comes to the consumer, it would seem, raising its own costs to have Amazon Prime. David, from your perspective, let's talk about the business models that you are seeing and the way that they evolve and the way that at the moment, a lot of them have been under pressure from a regulatory perspective. Do you think, it's interesting with Meta, for example, they've talked up very much competition And that's kind of what they've been trying to tell regulators, lawmakers as well.
It's a good point. It's a very convenient argument for them to be making for a number of reasons, given the assault they're facing from regulators literally all over the world. And TikTok in particular, it's a plausible complaint they're making. They're definitely facing pressure. I do think that it's worth mentioning that I think Facebook's stock sell-off was excessive considering the nature of the news that they unveiled in their earnings at Meta. I'm sorry, I keep calling it Facebook. But so really, it's fascinating for me to hear someone talking about Facebook as a value stock. But if you look at the PE, it's hard not to think it's an undervalued company right now, because there's no question, even though advertising spending for small businesses and even more broadly, as Mandeep suggests, could be softening, their position is so strong in global advertising markets and is so deeply integrated in global economies that they're likely to do well for the long term. And I don't applaud many of the things they've been doing in the last couple of years even, and I think the market may be punishing them for just simply distrusting the company more broadly.
Do you buy that, Mandeep? And what did you make of the fact that no one bought the dip today?
Well, so I think it's the way they went about the conference call, highlighting TikTok as a competitor. TikTok isn't new. So the fact that they kept emphasizing, they're going after TikTok and the pivot to videos, I think they caught the market by surprise, the way, they talked about all the competition and this change in strategy and then the metaverse expenses. So clearly there are multiple issues going on, but look, they are the incumbent players when it comes to social media advertising. Like I said, the small business advantage is a big one. It's not going away. And they can fix things. If Apple has to open up the ecosystem, which is the bill that is being introduced in the Senate, that could change things. If they can introduce a payments platform on the iOS, I think that can open things up for them. So it's still fixable. It's just that the way they laid out the conference call and the way they talked about the transition, I think didn't make a lot of sense, and it didn't comfort anybody on the call.
Mandeep, you've got some other calls next week, because Uber, Lyft coming. Who should we be paying attention to as we've got earnings still to come next week?
Well, so we know costs are rising for every business out there, and that will be a headwind to the margins. And that's one thing to keep an eye on. Who has the pricing power to pass on those costs? I think Uber and Lyft so far have showed that they can pass on some of those costs, but at some point it's going to start hitting their margins. And look, these companies aren't profitable to begin with. So if the costs start to hit their margins, I think that will be an overall negative for them.
Notable, we've got Peloton earnings next week as well amid this current breaking news. We thank you so much, both of you. Have a wonderful weekend. Techonomy founder David Kirkpatrick and Bloomberg Intelligence's Mandeep Singh. Thank you both. Coming up, advancing the Bitcoin system in Africa. We'll speak with Recursive Capital CEO, also a board member of B Trust. Now it's a blind trust set up by none other than Jack Dorsey and Jay-Z to fund Bitcoin development in Africa and India. More on that next. This is Bloomberg.
Last year, Jack Dorsey and rapper Jay-Z announced that they were giving 500 Bitcoin, or more than $20 million, to set up a new endowment fund called B Trust. The trust was designed to be blind, to fund Bitcoin development in Africa and India, and it needed new board members to steer the mission. Dorsey put out an open application on Twitter, and after reviewing 7,000 submissions, they whittled it down to 4. Joining us now is one of them, Abubakar Noor Khalil, B Trust board member and Recursive Capital CEO. Thank you so much for joining us. Bring us inside of this process. What were your conversations like with Jack Dorsey, and what now are the expectations of this?
Yeah, thanks for having me, Shonali. So, having spoken to Jack and being a part of the process, I think, the major thing that stuck out would be the general goal that we have in B-Trust, which is to grow the Bitcoin development ecosystem in Africa, as well as India. And, now primarily our main focus is to build out that, the Bitcoin ecosystem in Africa primarily. And then as we build our capacity, we expand to other regions in Global South like India as well. So, the major thing that we're trying to prioritize is transparency, because we recognize that this is a novel venture, so to speak, a novel initiative. So we want to make sure that we're as open as possible in terms of where the funds are going to, how we're going about it in terms of operations and things like that. And in all honesty, the expectation from Jack and the rest of the team is, that this is all up to the board itself. We're going to be the ones to set up, principles, guidance. It's basically completely all in our hands in terms of how we determine the future of, both the disbursements as well as operations and how it works. So, the expectation obviously is for us to grow the ecosystem, like I mentioned, and that will primarily not be what other people might have been thinking, which is, venture capital style equity funding. So we're going to steer clear away from that. We'll be most likely, primarily funding through grant-based funding to developers working in the space that are working on, the Bitcoin ecosystem. So things like working on Bitcoin Core and some of the projects in the space. So that's primarily what you'll be seeing. And, we're still getting things set up, but, we've made quite a lot of progress, and we'll continue to communicate that progress to the individuals, to the public, so to speak, on Twitter.
Well, what do you think?
That's kind of where we're at.
What can you tell us about the types of projects you're funding and where the money may end up going ultimately? What is the goal here in terms of deploying these funds?
Yeah, so in terms of the general goal, like I said, will be the maturation of the Bitcoin ecosystem here in Africa. And primarily funding will go towards, like I said, grant-based funding initially. So it'll be developers working in the ecosystem, and gradually we'll be expanding, some of where the funds will be going to be dispersed. And with regards to more generally when that will begin, like I said, we're still setting things up. So, I know the expectation is that we're probably going to be deploying really, really soon, but these things take time in terms of setting up. Like I mentioned, we have to do quite a lot in terms of setting it up from scratch. I want to take our time. We don't want to rush this. We don't want to get bust and trip ourselves over. So we'll most likely be, in terms of deployment, I can't give an actual date, but very, very soon. Like I said, we'll be communicating this all.
You mentioned Bitcoin a few times here. I'm wondering how you're thinking about Bitcoin versus other crypto assets. There's clearly some preference here to go towards Bitcoin. It's in the name of the trust, after all. And why is that exactly? What do the other currencies not have that Bitcoin may be offering to nations in Africa and India?
Yeah, that's a great question. Like you mentioned, the main focus with B-Trust is to be solely focused on Bitcoin. And the primary reason is, Bitcoin is an open monetary network. It is the most secure, and, it has a lot of attendant benefits. I could run through them, but I'll just highlight a few of them. So primarily, we have quite a lot of unbanked individuals, millions, and sometimes the numbers could actually run into billions, I think. And Bitcoin is a bank for those that are actually unbanked. The cost of setting up a Bitcoin wallet is relatively cheap. All you need to have is a smartphone and internet connection. And, with regards to the opportunities that it does provide to individuals, we're talking about financial sovereignty. So, this allows them to be able to be insulated from, government risk in terms of seizure of funds and assets and all that kind of stuff. Another thing is it's also a hedge against inflation. Another thing is, there are a few other benefits in terms of remittance, which is a huge one, especially with Lightning, given how much mature Lightning has been. So there are a couple of benefits that we see in terms of Bitcoin that other cryptos simply do not have. And at the end of the day, Bitcoin is a movement. That's what we see. It's more than just, what you see with other projects like being companies.
And it's funny you mentioned Lightning, because you see firms like Cash App integrating the Lightning network. I'm wondering how integral that is for companies to be able to make this mission possible.
Yeah, it's very, very important in terms of, like I said, they'll be plugging in directly to an open monetary network that allows individuals to have cross-border payments that are cheap and global and instant and free. Well, almost free. But, so the point would be going more towards the future. What we look at or what we see that would be, the way forward would be a lot of these companies, whether it's Twitter or some of these other apps, integrating to Lightning in terms of allowing individuals to access this open monetary network. Another thing is, wallets integrating that. That has already started happening in Africa, in a company we're invested in called BitNob. they managed to integrate Lightning and actually did a transaction over from Chicago to Nigeria instantly. It was within like 10 seconds or so. So we see the future is instant, is global, is Bitcoin.
Abu Bakr Nur Khalil, thank you so much for your time. We hope to have you back soon. That's B-Trust board member and Recursive Capital CEO. Much more of Bloomberg Technology after the break. This is Bloomberg.
Let's talk about my hometown, UK. The startup LV there raised more than $90 million last year, one of the largest ever for a female-founded femtech company. LV CEO Tanya Bola says it signals that technology designed for women is finally starting to be taken seriously by investors. Bola spoke with Bloomberg's Nate Langson about how poorly designed medical devices for women led her to change the way breast pumps are made.
We are a feminist tech brand. We are using tech to improve gender equality, to give women more control over their bodies. So I never had a plan to work in tech or become an entrepreneur. I was working in women's health and I became pregnant, and like many women, suddenly realized there's so many things that happen to our bodies that nobody talks about until they happen.
So that was 2013 when the company got going, and your first product was the trainer. You had the success with the product enough to start thinking about a second product, breast pumps. Can you talk us through how that thought process went, and how did you decide upon doing breast pumps next?
I wish I could say I had this amazing long-term strategy when I started LV, but it was a passion project, saw a product problem that I wanted to solve, focus on the pelvic floor health, could see that it was beginning to gain traction, but then suddenly finding myself in the tech space and recognizing that all medical devices, particularly for women, are horrifically designed, and nothing is as bad as the breast pump. I mean, it epitomizes everything that's bad about bad tech for women. I don't know if you're familiar with the old architecture. It's like a huge motor, hasn't been innovated for decades. Plug it into a wall, it like makes this like horrible noise. But more than that, it's actually painful to use. You have to clasp on these breast shields. You have to sit there. You know, women told us they felt like they were being milked like a cow. So it was an example of like an intimate piece of technology that's very important to women during a quite life-changing period that's been so horribly designed that women are having a really negative experience. So having seen that product and seeing it so badly designed, we just sort of ripped up the rule book, started with a blank piece of paper and said, you know, how should a breast pump be designed?
Obviously, though, one of the key differences is this is very high tech. It's got Bluetooth, it connects to your phone. How does that overall change the experience for women compared to those devices that I would have seen?
And even the manual pump that you described, with both of them, you have to use your hands, which means you can't actually do much else. So in fact, we've launched even to the manual pump. This is our wearable option. So we've basically turned the whole category on its head. So we've changed both SKUs, both manual and wearable, into a very discrete proposition. So the idea or the vision being, what if I can have something that's so discreet, I pop it in my bra, I let go, and the app does the rest. And that's what we've managed to achieve. But yeah, from a technological challenge point of view, it's incredibly complex, right? Because in order to be very discreet, it needs to be very small, and it needs to also be silent, because if it's noisy, that's the opposite of discreet. So we had to use very different technology. So most pumps use a rotary motor. We use a piezo pump, which vibrates silently 10,000 times a second. So again, it's about what we keep doing with women's health, is using innovation in other spaces and applying it to women's health. And because there's not been any attention there, it's that's how we're able to redefine categories, really.
Just so smart. Bloomberg's Nate Langson there speaking with the founder and CEO of LV, Tanya Bola. Another story that we're following, Bloomberg's learned that Deutsche Bank is seeking to tighten oversight of employees' electronic communications. Now, it comes amid a clampdown by US regulators on the pretty widespread use of services such as WhatsApp in the financial industry. Now, Deutsche Bank plans to roll out a fix to strengthen its ability to store and monitor the use of messaging apps. Now that does it for this Friday edition of Bloomberg Technology. Wall Street Week is up next with my colleague David Weston. He's joined by Sonal Desai, CIO of Fixed Income and Franklin Templeton, Sherman Masava Romani, it's Goldman Sachs' CIO for Consumer and Wealth Management, as they break down the week in markets. And what a week it's been. And it's all been about the Fed, and actually US Treasury Secretary Larry Summers has been reacting to Friday's jobs report and what he sees the Fed doing. Related companies, CEO Jeff Blau on the return of New York real estate. Stay well, have a wonderful weekend. This is Bloomberg.